My name is Deron Wagner, and I'm the founder of Morpheus Trading Group and also the founder of DragonCharts, which you may or may not have heard of yet. And if you haven't heard of it, you're about to this evening. And I'm very excited as I sit here before you to introduce to you something that we've been working on now for about 1 year. It's been under development, and it's finally ready to be unveiled to the public and to our valued Morpheus clients as well. Joining me this evening, I have Ed Baylog. Ed is actually, many of you know Ed if you subscribe to the Wagner Daily newsletter. He helps write the newsletter and finding ETF picks for that. Also runs the live trading room for us every morning. And Rick Petticelli is also with us, and Rick is the gentleman who writes the stock sheet every day and also runs the stock trading room in the morning. So that's the three. All three of us are here, and I'm going to start things off, and Ed will be presenting a little bit later on as well. So without further ado, let's go ahead and jump right in. Okay, what is DragonCharts and how does it compare to MTG? Well, first of all, DragonCharts is a company that I started about a year ago in Asia. For those of you who don't know, I actually live most of the year in Asia, and I started it because I saw an opportunity to teach the same strategy that I'm doing with Morpheus Trading Group, the same proven successful strategy, and teaching it to people who trade the Asian markets. But I also had some ideas for some other interesting things to add on, which we're going to talk about. But first of all, the most important thing you need to know is that everything that we do at DragonCharts is based on the exact same swing trading strategy as we have at MTG, Morpheus Trading Group. So if you like the strategy that we have, which actually does quite well over the past 10 years that we've had it, and in fact this month the Wagner Daily newsletter, our ETF newsletter, is on track to have its one of its best months ever. While most people were losing big in the market, we're actually doing very well. So that's the first thing you need to know, is that it is based on the same strategy as MTG. So it's basically several different types of plays we take: breakouts, pullbacks, and trend reversals, and we'll talk more about that in a minute. What else is different about DragonCharts compared to Morpheus Trading Group? Well, the biggest thing, and what we're going to spend most of the time talking about this evening, is the brand new DragonScan stock screener. Let me tell you, ladies and gentlemen, I'm very excited about this because for the past year it's been under development, and what this is, I'm going to show it to you here shortly. But basically, it's a way to find the best stocks to buy in an uptrending market, or the best stocks to sell short in a downtrending market. And I have a little secret for you, a little confession. That is that many of the ETF and stock picks that we give every day in our Wagner Daily and our stock sheet newsletter have been a direct result of using this software behind the scenes, the DragonScan stock screener, which you will now have access to as well. And the reason we created our own stock screener is even though there's actually several stock screeners in the market in the US, there's none quite like what we do, because our stock screener, rather than just letting you do a whole bunch of different technical filters like MACD and Bollinger Bands and so forth, it's actually tied to our trading strategy. So it's designed to go hand in hand with exactly what our trading strategy is, but advanced traders can also customize it to their own requirements as well. There's also a greater focus on trader education with DragonCharts. One of the things about Morpheus Trading Group is that our newsletters primarily focus on giving stock picks and ETF picks, and we educate as well in our commentary and in our live trading rooms. But with DragonCharts, the whole focus is actually on trader education in addition to the stock screener. So in other words, what that means is that we actually have a stock trading video course. And we put about 150 hours of work into this course between Ed and Rick and I, and it teaches you all the inside details of exactly what our trading strategy is, everything from the very basics all the way up to advanced topics like mastering the psychology of trading, risk management. So if you want to know exactly how we trade and what our strategy is, that's now available through DragonCharts through a video course that I'm going to be showing you later as well. And the last thing that's different about DragonCharts is direct access to the Asian markets. Now, DragonCharts can be used for the US markets, as I'm going to show you here, and that's what we're going to talk about tonight. but it also gives you direct access to the Asian markets. So I'm a big believer that in the long term, the next 10 to 15 years, or maybe even less than that, really all the strongest markets in the world, I believe, are going to be in Asia and some of the emerging markets that have less debt and not a lot of the same issues that we're going through in the US. And we wanted to enable our clients to be able to take advantage of that. So the software actually works on the Asian markets, and we actually have special relationships and partnerships with several brokerage firms that even if you live in the US, you can actually trade directly on the Hong Kong market, for example, or the Singapore market, all through one brokerage account. You can trade. So we provide all these things at DragonCharts. So in a nutshell, DragonCharts, it is the same strategy as MTG. You won't find a lot different, except it's like an MTG on steroids, I guess you'd say, because we have our own stock screener now. We've got a greater focus on trader education, and we've got the bonus of direct access to the Asian markets. This is the website, DragonCharts.com, and you can check it out later if you like. But the US version will look a little bit different, but it's because I'm logging in here from Asia, but it's a very similar looking site. And for the software, you can click on the software tab, and you'll get this page right here that describes the software. Now, once you're already a member, you just click on Launch Now. If you're not a member yet, you can start a free 2-week trial, and I'll talk about that a little bit later, and how much it costs and so forth. But since I'm already a member, imagine that. I click on Launch Now, I enter my username and password, and I hit Login. And you'll notice that what happens now is we actually automatically load the software. The beauty of it is there's nothing to download. It's actually all web-based, and that makes it very nice in terms of system requirements. All you need is a web browser and an internet connection, and you're in business, because it's all web-based. It runs right on our web, right on the internet. And let's go ahead and talk about the three, basically how it works first and what these things mean. And then we'll actually show you some examples of how to actually go ahead and do the scans. First of all, you'll see 3 tabs here. It's called Dragon Scans, Self-Serve, and Indices. Dragon Scans is our full service preset scans. This is the coolest part. You notice here scan type, relative strength breakout, pullback, trend reversal, and short scan. What this is our predetermined formulas that Rick and Ed and I have spent about a year formulating, and we used to have to use scanning software with complicated programming to get exactly what we wanted to find the best stocks. Now we've done all that hard work for you and put that all into a preset formula where you click on the button and you get all the stocks that meet our criteria. The relative strength breakout will show you stocks that are consolidating near their highs, showing relative strength to the broad market, and they've either just broken out above resistance or they're about to break out. The pullback scan is a stock that's in a strong or steady uptrend that's pulled back to support, of its moving average, or it's had a 2 to 7 day pullback off its high. Trend reversal finds stocks that have been in a downtrend for a long time and then suddenly start to reverse their downtrend. And the short scan is exactly what it says. It's stocks that are setting up for a potential short entry. Now we have more options. You can click on more options, and this is where you can set a minimum price or a minimum average daily volume filter. If you don't want to trade, stocks that are too cheap, or you don't want to trade stocks that have no volume, you can set these filters up as well. So let me go ahead and just demonstrate this part, and then we'll look at the other 2 tabs after that. First of all, notice for country, right presently, DragonCharts covers Australia, China, which includes Hong Kong, India, Indonesia, Singapore, and the US. And tonight we're going to talk about the US, so we'll select that. And then we have exchange. We can select New York, American Stock Exchange, or the NASDAQ. And then there's indexes. Now this is optional. If you leave it on all, you can scan all the indexes, but if you want the results to be only within a certain index, you can narrow your results down, for example, to just the NASDAQ Composite or the NASDAQ 100. We'll leave that set on all right now. Let's go ahead and do a relative strength breakout scan. Now we're in a very weak market, as you know, but the relative strength breakout scan will still show you the stocks that are actually holding up relative to the market, and these are going to be some of the strongest stocks in the market. Without this scan, it takes you hours and hours to look through thousands of stocks to find it. But you're going to see here with just a click of a button, and in a matter of only seconds, you'll find the strongest stocks. We'll do a minimum price range of $10 up to no max. And for average daily volume, let's do a minimum average daily volume of 1 million shares. Okay, and no maximum. Now we hit the Scan Now button. And you'll see that it took, what did that scan take? About a second. And it says here 16 results found. And here they are. This is the 16 results found. Now, most of this is self-explanatory: ticker symbol, company name, closing price, the change for the day, the high, the low, the volume. Percentage average volume here is the percentage of the volume of the stock's volume for this day relative to its average daily volume. So you can see where there's volume spikes. And in RS, this is relative strength rating. Now, this is not to be confused with RSI. It's not the relative strength indicator. It's relative strength, which is our proprietary way of measuring how strong a stock is relative to every other stock in the market. So even if all the stocks are down, the strongest stocks out of all the stocks that are down are still going to get the highest relative strength ranking. Those of you who know the Morpheus trading strategy know that it's based largely on relative strength. We buy stocks with relative strength and we sell short stocks with relative weakness. So that's why we have this in here. And you can sort by any of these criteria if you want to find volume spikes or you want to find relative strength and so forth. You can sort by any of these. And the relative strength ranking actually goes back over a year of data. So what will happen sometimes if the stock has less than a year of data, it might show up as strong relative strength, but it's not accurate. It's a false reading because it's an IPO, for example. Now you can download this list of stocks. You click on this button here, download CSV, so that if you have a trading platform like TradeStation or Interactive Brokers, you can then simply download the list here and then import it into a watch list on your trading platform, because this is not a trading platform. And also, it's important to understand this is not a technical analysis platform. It's not designed to do all kinds of technical analysis. It gives you basic charting, but it really what it is, it's a screener. Okay, now we're incorporating in new features all the time, but it's not a technical analysis platform. There's plenty of them out there for that, but this is a screener. So if we want to look at the stock, we simply click on the ticker, click on the company name or the ticker, and it loads a chart. You'll see here. And the charts, they have the 20, the 50, and the 200-day moving average, which are the 3 moving averages we use at Morpheus Trading, for those of you who don't know that. And you can see here, you can select the 6-month chart, you can select 3-month chart, 9-month, 1 year, whatever. The default is 9 months, but let's do a 6-month chart here. Now, you see on the left side, this is the list of all the stocks that came up in the scan. So if we want to look through this list, all we have to do is we can hit the space bar on our keyboard and it'll just keep loading one stock at a time, so you can quickly go through all the stocks. Now you can turn on and off these moving averages. Like if we don't want the 200-day moving average, we click on it right here. That'll turn it off, and we can turn it back on, for example. Basic drawing tools for drawing trend lines right here. Draw trend lines, and then you can erase it. Like I said, the technical analysis part is very basic. It's designed to just help you find the stocks, and then you can do more technical analysis with a separate platform. Now, once you've actually modified the chart, like you've drawn a trend line, for example, you hit this button here. It says Enable Space Through, and that'll enable you to space through the charts again, because they're flash-based charts, so you have to hit that button. But even though we've got the S&P and the NASDAQ and the Dow well off their highs, about 20% off their highs, and below their 50-day, their 200-day, and their 20-day moving averages, I'm going to show you here with the relative strength scan, the first stock on our list, GMCR, notice how it's still consolidating near its highs. The next stock on our list, LQDT, look at this. This is a stock that went up about 11% today, I think it was. It broke out. Now, it'd be very hard to find this, of course, if you didn't have some type of screening software. Now, this is an end-of-day screener, by the way. It's not real-time intraday, because we're not day traders. So this is designed to be an end-of-day trader. You can do all your research at night on your own time, whenever it's convenient, and then you have your research for the next day. So look, these are the strongest stocks in the market right now. Now, of course, the scan is going to depend on market conditions. It only returned, I think it was 17 results, because we're in a weak market. But if we were in a strong market, of course, it would return more results. But look at here, we have Whole Foods market. I mean, if we were in a strong market, this stock's consolidating right near its highs, right up here for a potential breakout, and it's holding above the 20-day moving average. Now, those of you who subscribe to our newsletters, you know that we're not buying anything right now because we are trend traders. We trade in the direction of the dominant trend, which is still down. But if we were buying stocks, this is a very strong one. So, you know, to save time, I'm not going to go through the whole list, but you can see here that they're all very strong stocks in an uptrend, despite what's going on in the U.S. market. So I have a little hint for you here. When the market does eventually start to turn back up and head higher, these are going to be the first stocks that probably take off because they're already showing relative strength. And stocks that don't drop when the market's dropping are usually the first ones to surge higher when the broad market does. So notice how, just like I said, it took us a second and we found the strongest stocks in the market. The pullback scan, just to show you how that one works. Okay, we can do pullback scan here. And let's just to show you, we can lower our volume, 500,000. Okay, we get 26 results. These are going to be stocks that are uptrending, that are on a pullback. Let's take a look at a few. Here we have Amazon. Now, Amazon was also on a relative strength breakout scan, but it's also on a pullback. Why did this come up in our scan? Because notice it's pulled back from its highs and it's holding at its 20-day moving average. Next on our list is Apple, everybody's favorite stock in the world, right? Apple's also on a pullback. It's still strong, but it's pulled back from its highs and it's holding above its 20-day moving average. Costco. So if you don't want to buy stocks that are already extended, you can do this pullback scan, and a lot of these stocks are going to be pulling back to form potential buy entries. They've already pulled back to support, for example. So you can see these are all stocks that are near their highs but have pulled back from their highs. And that's the pullback scan. And again, the number of results you get is always going to be dependent on market conditions. Sometimes you'll do a scan and it'll say no results found. Now that means the software is still working correctly, but that's simply an indication of market conditions. And if you're getting no results found, for example, with one of these, that means that it's not a very good market to be trying to buy stocks. Trend reversal, you probably won't get a lot of these right now. There's two. The trend reversal is stocks that have been in a long protracted downtrend that are starting to reverse their downtrend. They might not be in a new uptrend yet, but they've reversed their downtrend. Okay, and you can see why this one came up on our list. We can draw a trend line here. And notice how this has broken its downtrend. And it's crossed the 20-day moving average. The pink line has crossed up above the 50 and it's trending higher. And it's forming a base now. So this is a stock that's reversing a downtrend. Now often stocks that reverse their downtrends, this scan is primarily to be used in bear markets, but these are usually stocks that'll show early leadership when the market starts to reverse. And then we have a short scan. Now you're going to get a lot more results for this because, well, there's so many weak stocks in the market right now. So you look, 101 results. Okay, now if it was a bull market, the short scan would turn up only a few and you get a lot more in relative strength breakout. But the short scan, let's take a look at some of these, what comes up in the short scan. Okay, these are going to be stocks that have relative weakness and they're trending lower. They're below their 20 and their 50 and their 200-day moving averages, and they're trending lower. Now, by the way, just to give an example of how we're continually updating the software, we just added this like literally 2 days ago, the short scan. It's a new one we just added, so we're continually improving and upgrading the software. So if you want some short ideas, you go through this list and you save yourself hours and hours of research time. So that's what's called the Dragon scans. That's the full serve scans, in other words. And of course, you could do the same scan with the NYSE if you wanted to. Now, at the present moment, by the way, in case you noticed, there are no ETFs in here. We're adding those. They'll be online within the next 1 or 2 days, actually. So it's just stocks at the moment. Now, you also notice here, we've got a search box here, which is a very quick way to find stocks. If you want to just jump directly to a stock, for example, you can type in the search box right here, and it'll just go right to that stock. You type in, for example, IBM, and IBM comes up, and you just select IBM. And if there's multiple, it works a lot like the Google auto instant search, I think they call it. So if you type in, for example, HSBC, okay, HSBC comes up. That's on the on the Hong Kong stock market. So if there's more than one result, those results will show up here, wherever you type it in. Let's see, we could look at trying to think of stocks that trade on more than one exchange. But if there's more than one match, it'll highlight it in blue, and you can just select the one that you want. So you can quickly jump directly to any of the stocks. Okay, so I showed you Dragon scans, and let's look at the self-serve. Now the self-serve here works the same way. You've got country and exchange, works the same way. So let's select United States, okay, and then you've got NASDAQ, New York Stock Exchange, whatever. Select NASDAQ again. Now this is a little different. The self-serve, we call it self-serve because it's more customizable than the Dragon scans. The Dragon scans is our preset scans, but for those of you who want to get a little more creative or fine-tune our scans, we keep it very user-friendly. You don't have to know any programming language, and you don't have to try to figure out 1,000 different indicators because it's based on our strategy, which is very simple. It uses price, volume, moving averages, and relative strength. So here you can turn on or off the moving averages that you want to scan with. So for example, if you want to look at the 20-day moving average, the price relative to the 20, you can turn 10-day, 20-day, 50, 150, or 200-day. Simple moving average or exponential moving average. Those of you who read our newsletters know we use the 20-day exponential moving average. And then we can turn on the 50-day simple moving average. These are the defaults. And the 200-day simple moving average. Now, this slider here, the way this works is this is telling you where do you want the price to be in relation to the moving average. So for example, if we keep it this way, this is going to show us all stocks that are trading above their 20, their 50, and their 200-day moving averages in the NASDAQ. And if we hit the Scan Now button, you'll see there's 122 results found, 122 stocks that meet that criteria. Okay, and now if we want to say these are going to be strong stocks, of course, but let's say that we want to also throw a relative strength ranking in there. Remember I told you relative strength is how strong the stock is relative to all the other stocks in the market. Because some of these stocks might be above their moving averages, but might not have much relative strength. So now we can add that as an additional filter and hit Scan Now. Now the number of results goes down to 87 results. And these are going to be the strongest stocks in the market. There they are again, Amazon, Apple, and so forth. A lot of the same stocks. We can throw a volume filter in there again. Let's say we want 1 million shares, minimum average daily volume, and maybe let's go with a $10 minimum price. And now the number is going to be even less. Now we're down to 19 results. So there's 19 liquid stocks over $10 that are above their 20, their 50, and their 200-day moving averages. If they're above their 20, their 50, and their 200-day moving averages, that simply means that they're in an uptrend, which there's not many stocks right now. But you can quickly find the needle in a haystack with this screener, and which is great for, if the market reverses one day and you don't know what to buy, you can quickly find the strongest stocks this way. This tab right here, close versus 52-week high, this is going to show us where the stock price is in relation to its 52-week high. Many of you know we'd like to buy stocks in a bull market, that is, or in a market that's not a bear market, I should say. We like to buy stocks that are trading near their 52-week highs because they don't have any overhead resistance or supply to contend with. So for this scan, for example, if we hit Scan Now, this will show us all stocks that are within 10% of their 52-week highs. There's 119 results. Let's see how many stocks are within 3% of their 52-week highs. 18. So these are going to be all stocks that are very near their 52-week highs. Oh, look at that. Looks like ETFs are already being added into the system as we speak. See ETFs there now. Okay. Now, this also can be used for finding short setups. Okay, and I'll give you a good example here of how you can quickly find short setups. For a short setup, here's one type of scan I'll show you. Let's say we want the price to be below its 200-day moving average. All right, so we don't want the stock to be above its 200-day moving average, so we'll say it must be equal to or below the 200-day moving average. So that means it's below a major level of support there. But a lot of stocks that are below their 200-day moving averages may be too far below. In other words, they're extended to the downside and they're not at a point where you'd want to consider shorting them. So instead, what we'd want to do is, let's say we don't want the stock to be too far away from its 50-day moving average. Let's say we want the price to be 3% below the 50-day moving average up to 3% above. So that puts it in a very small range that the stock price has to be trading very near its 50-day moving average, but below its 200. And so that's going to show you stocks that are probably bouncing into resistance of their 50-day moving average. Let's throw a volume filter in here. Let's say 2 million shares, because for shorts we like to have a little more volume. And we'll use a price greater than, let's say, $20 this time, or $25. Okay, and we hit scan now. Okay, we get 9 results. Let's take a look at these. Okay, so here you go. You've got the stock below the 200-day moving average, which is this blue line, and the 50-day moving average is the green line, so it's within 3% of the 50-day moving average. And this, yes, this is a valid short setup. Below today's low, it probably comes back down and tests this prior low from August. Let's see what the next one is. CTSH, yeah, in the stock sheet, yesterday, this little move here yesterday stopped us out of it, but it's back down now to its 50-day moving average, and below the 50-day moving average, it's back in play again as a short. So this is a quick way to find weak stocks that are bouncing. Here again, below the 200-day moving average, but near its 50-day moving average. It's bounced into it. Okay, so again, I won't go through all of them. Now there's another scan that I like to do, and this scan is a little more aggressive. This is not something that we normally do for a lot of our trade setups, but just to show you an example of how creative you can be. What I like to do sometimes is, rather than selling short stocks that have relative weakness, I'll find stocks that were former leaders that had relative strength, but they've just started to break down. They broke a trend line or broke support. So for example, for that, let's say we want the stock to have a relative strength ranking of 80 to 100. So over the past year, it's going to be one of the strongest stocks in the market. But let's say we want the price to be below, well, let's leave the 200-day moving average out. Let's say we want it to be below its 20-day moving average, and let's say we want it to be below its 50-day moving average. So what we're going to look at now is we're going to find stocks that are strong, but they've fallen below their 20 and their 50-day moving averages. Let's see what we get. 197 results. All right, we forgot a volume and price filter. Let's put a volume and price filter in there. About 2 million shares and $10. There we go. 8 results. There we go. So let's take a look at what we got. Crocs. The guys who make funny shoes that are comfortable. All right, here we go. This stock has not broken down yet. It's below its 20 and 50-day moving average, but it's still in an uptrend, so that would not meet our criteria for something that's broken its uptrend. Now here's another one starting to roll over. Now what we could do is we could even add this in. Let's say we want it to be below the 200-day moving average, or at or below the 200-day moving average. 4 stocks. Let's see what these are. I happen to know Sina because we're trading Baidu short, and Sina is very similar. And you see here, Sina was actually a stock with good relative strength over the past year, or even the past 3 years, but it's recently broken down below a major level of support right here, horizontal price support, you can see. And it's actually consolidating in a tight range here for the past 4 days. Looks like it's ready to fall off a cliff. And we got SGI. Let's take a look at that one. There again, we had a stock that had relative strength. It's rolling over. VRTX. So there's a lot of, the point is you can see there's a lot of ways to customize this to be flexible. Okay, what I'm going to do at this time is turn things over to Ed. And Ed wants to actually show you some other ways that you can use the self-serve screen as well. So I'm going to turn over the desktop sharing to Ed. He's got some scans. He's been finding, many of you may know, Ed's been on fire this month, I should say. It's probably more like it because in the Wagner Daily newsletter, ETF newsletter, we're 7 for 8. We've had 8 trades so far that we've closed this month, and 7 of them have been winners, and we're on track for our best month ever in the newsletter. And actually, Ed found a lot of those stocks through the DragonScan stock screener here on the short side.
Well, Darren got a little carried away there on me. He kind of encroached in some of my territory. one of the scans, something similar to what I've been using. But if we go to the self-serve, the self-serve tab, and Darren kind of touched on this a moment ago. But one way to get an idea, a quick idea, what sectors or what stocks, whatever, are the strongest or the weakest, and just to get an idea, what's moving, what's not moving, to give yourself just a point of reference, you can just start your nightly research by just going to relative strength and saying, okay, I want to see things that are, let's say, between like 30 and 65, and just scan for it can give you kind of a broad idea what sectors or what stocks, etc., are struggling the most. And if you get a lot of results, like here we got 727. I mean, the first thing I'll do is to narrow that down is I'll just jump onto like volume and say, okay, I want volume of 2 million, and I want the price to be, let's say, over $25 or something like that, just to narrow it down right off the bat. So then you're down to like 11, 12, 15 results. You can, play with it from there real quickly. Then you have, a decent pool to work from, and you can go from there. And then of course the same thing in, on the opposite end of the spectrum. Just real quick, if you want to see what's acting pretty well, I might go from like 75 to 100, maybe take it to 80, and just do a quick scan. Same type thing. That gives me sort of a starting point to just get a feel for the market. I mean, I'm not going to look at any of these stocks right now, but I'm just showing you this because it helps me sort of sort out what's going on, what's strong, what's weak, and what could be potential shorting, short candidates, long candidates, what have you. So that's just a way to get a quick perspective on the market. An example of a scan that I like to do, I'll take moving averages. We always use the 20 period exponential, and then we use the 50 and the 200 simple moving averages. I'll if I want to find things that are relatively weak, Darren kind of went did something similar to this a moment ago. What I'll do is I'll take if I'm trying to find things that are bouncing, I'll take things that like from zero, from anything that's at to 20% above the 20 period moving average, but I want the long term and the short term trend to be down. So I'll select for the 50 period simple moving average at or below that moving average, and then at or below anything below the 200 period moving average, and then using price and volume as screens to give us a decent population, a decent universe of stocks. Let's see what this brings. And you can refine them from there. Like if I get too many results, like here we got, very narrow pool of results, but hopefully these will be things that we're bouncing. So we'll take a quick look here. And we're looking for stuff that has, bounced up. So it's within 10 to 20, at or within 20% above the 20 period moving average. And the idea here is to try to find things that aren't at their dead lows. If you're trying to short something, here's a good example. DirecTV, it's a pretty good looking setup here. By definitions, it looks like
nice reversal candle there today, huh?
Yeah, exactly. But by definition, since you're 10 to 20 or up to 20% above the 20 period moving average, well, we came right into the resistance at the 200 period moving average in blue, and then the 50 just crossed over the 200, this green line right here, and that's often referred to as the death cross. When the 50 crosses over the 200, a lot of technical traders start jumping on stocks that meet that criteria. And then notice the last 2 days we have double reversal candles. I mean, here twice we tried to get above the 50 period moving average, and 2 days ago or yesterday, I guess, we sold off and closed in the bottom half of the range. And then today We closed almost at the dead lows of the day. So, you could have legitimate entry on this below today's low, which is 44.22. And a more conservative play would say, okay, well, take it below the 2-day low, which would be 43.48. So yesterday was what again? 40.22. What's today? I can't read here. Low 40. Okay. So anyway, be that as it may, we have a legitimate entry here below either one of those two reversal candles, and that's what we're looking for. You look for something that bounced. I know there's a lot of retail. There's another good one. We're right above the 20 period moving average. Two reversal candles are sort of like a hesitation candle 2 days ago, today or yesterday. Today we have a open at the high, close at the low. That's not a good sign. And we've overcut that moving average now. Same thing. See how all these patterns look the same. When you do these searches, you're going to get things that look a lot alike. And what will also happen is you'll tend to find sectors will cluster. You'll get individual sectors that will cluster, and you might see 4, 5, 6 different stocks from one sector out of 30 that are all acting the same way. I know one that I did a search similar to this earlier, and one that came up was I think it was some of the department stores. I want to say Kohl's was looking pretty bad. Very similar scan, yeah. So there you go. Same type of pattern. I mean, that's very, very bearish pattern. And you can take it in the other direction. I mean, you can play around with this all different ways. You might say, I want to find things that are like near the 20 period moving average. Whoops. That are above. I'm sorry, the 200 period moving average at or above the 200. At or above the 50. So whenever I'm selecting for these longer period moving averages, I'm saying, all right, I want the intermediate and long-term trend to be up. So I want to be above those. And then, I want it to be, near my 20 period moving average, for instance. I want it within, several percent, maybe, 2 to 3, 4% of the 20. Leave all the other criteria the same. Scan 18 results, and a lot of the same names are going to tend to come up. There's not much that's strong out there right now. But what I've really done here is just selected for stuff that's pulled back, that's above the 20. I'm sorry, above the 200 and above the 50. So I know I'm in an uptrend, and then I'm at or very close, just at, above, or slightly below the 20.
And by the way, Ed, notice that a lot of these stocks are the same stocks that came up on our pullback scan that we did earlier. So we do all the hard work for you with the preset scans, but you can customize it if you like. But you notice a lot of these are the same stocks.
Yeah, that's right. And really, I mean, that's what of course, the pullback scan would be. I mean, that's the intention. And of course, we tightened down the criteria a little bit on that. But with the self-serve scan, then you can go in there and select by price and so forth. So if you don't want to be dealing with stocks that are less than $30 a share or something like that, you're not going to pull all those up. But what's nice is, and there's so many different permutations of different combinations you can use. There's all different just tweaking the things just the slightest amount sometimes can yield impressively different results. So sometimes I'll just tweak around with with different aspects of it. But this is what you're seeing here is the universe of strong stocks that are left. This is pretty much it. But I think the biggest thing, the thing I like the most is the relative strength. The relative strength, the ability to either do it through the self-serve for Dragon scans, because there's some proprietary aspects to that. That we're the way we rank all the individual stocks against every other stock in the market. It isn't, it's not the RSI that the relative strength indicator. It's just a ranking of all stocks against each other based on various factors. So we I find that just a very useful indicator or screening device, the relative strength screening device, once again, because it helps me sort of sort out what's strong, what's weak. It gives me a feel for what sectors are shifting. Is there sector rotation? And you tend to get a feel for it by tweaking the relative strength scan. But as you can see, there's a lot of different things you can change up. But there are two things. Those two things are the ones that I find very useful in my day-to-day research. And of course, just the ability to be able to quickly, take a look at the indices and, figure out which ones are, what's going on, not just in the U.S., but across the world. You get a pretty decent idea of, what's happening. I mean, obviously one market often foreshadows the next, what happens in overseas markets and so forth. So it's just all right there for you to be able to, have all the different indices right at one spot where I can quickly scan, take a look, and get a feel for what's going on in the U.S. and overseas. But anyway, that's all I got to say for tonight here, Deron. And it's good. I'm glad that we have the ETFs coming on now, because that's going to make my life a lot easier. So I'm turning it back to you.
All right, thank you, Ed. Basically, that's a good overview of the Dragon scan, and the main objective here is to obviously save time. I mean, rather than looking through thousands of charts every night to do your research, you can click a button and in a few seconds have the stocks that you're looking for. And more importantly, it goes along with our strategy. So for those of you who follow our trading strategy, you can now expand on what we give you, and and actually you find more ideas. Like a lot of the ideas on Rick's self-serve section of the stock sheet come from doing the relative strength breakout scan with the screener here, for example. So definitely a big time saver. And the other thing I mentioned too is that you can get direct access to Asian markets too, which is nice, because believe it or not, even though we've got some stock screeners in the U.S. that are quite different than ours, but in Asia over here, this type of technology is brand new. So we're one of the only, to my knowledge, stock screening software that focuses on the Asian markets as well, for those of you that are looking to expand your opportunities. So anyway, what you're looking at right now is the DragonCharts course that I told you about. I mentioned that we also do education, not only software. And this is a course that I'm very proud of. We've taken about 150 hours of combined manpower between Ed and Rick and I to put this together. And this is, we're spilling it all on the line. This is the result of 10 years of experience of learning the Morpheus trading strategy, which is what DragonCharts is based on. And we teach you in this course 8 different classes, everything from the very beginning to overview our strategy, when to buy, when to sell. That's basically specific setups. It's all videos, right? So we give you a lot of annotated charts, walk you through everything, money management essentials, and even the psychology of trading, which is really important. It comes with a workbook, and I can promise you, you have my word that you won't be disappointed with this course. For those of you that have been trying to learn our strategy and wanted a comprehensive way to do it, strongly recommend the course. It's available for just $3.95, and you can view the course as many times as you like, and you get 30 days of personal email support with us as well for any questions you have. But the next question may be on your mind, and after I go over the next thing, then we'll open up for questions and answers. Next thing is maybe you're thinking, how do I try the stock screener? Well, to do that, you first go to DragonCharts.com, and then you click on free trial. This button right here, free trial, and you'll see the different packages that we have available for free trial. We have different options depending on what makes the most sense for you. We have a basic monthly access, which is called our gold membership. This gives you the stock screener that you just saw with our daily stock pick videos. We actually send out videos every day too, where we teach you, you learn more about how to use the software, you learn more about our strategy, and we also give some of the best picks we like from the screener. Now the gold package does not include the course that I just showed you, so it's just access to the screener and the videos. That's available for just $49 a month. And then we have the platinum package, which is exactly the same as the gold, except it's a quarterly access. So you save 20%. You get a 20% discount. You save $10 a month. And then what most of our members over here in Asia have been signing up for is the diamond membership. And the diamond membership, it makes a lot of sense because it's a one-time fee. It's not a recurring subscription. And it includes the course, which is $395 by itself. The cost of the diamond membership is $895. If you take out the $395 value of the course, it's basically $500 that you're paying. And check this out, you get lifetime access. It's not a one-year subscription, it's lifetime access to the screener. It includes all the updates and our stock pick videos, and as a limited time bonus, I'm even giving an autographed copy of my book as well. After the first year, we do charge a small maintenance fee after the first year, $19 a month, but we can waive that for traders who are active and trade through one of our partner brokerage firms. And actually, I've got a special promotion here for those of you that took the time to attend the webinar. You can sign up for your free trial. You'll get a 2-week trial to any of those packages. You can get a free 2-week trial. And just like with Morpheus, you enter your credit card details. The reason we require your credit card is simply to prevent abuse of the free trial system. You know, people using fake names and multiple email addresses. So that's why we require your credit card. You have 2 weeks to try this software out for free. If you decide you want to cancel within 2 weeks, you just send us an email and we don't charge you anything. If you don't cancel, then we just automatically, for your convenience, we'll bill you whichever package you charge. And we've got a promotion for today only. If you register tonight by midnight, we're going to knock $100 off the price of the diamond membership. So it's on the website, it says $895. Your credit card would only get billed $795, and that's only after the 2-week membership, after the 2-week free trial. So we don't bill you right away, of course. So that concludes everything we have to show you. So now the question I have is, does anybody have any questions we can answer? If you have any questions, just type them in the chat box. You can click on the Go Meet Now panel and you'll see a chat button. Click on that chat button and you can type in any questions that you have. Dan, it varies. It depends. Our data provider doesn't promise us a specific time, but normally the data is available within about 1 to 2 hours after the close. So normally about 6 p.m., 5 to 6 p.m. Eastern time. Sure, Dan. Dan wants to know about the brokerage access to Asian markets. Dan, we have a partnership with 2 different brokerage firms. One of them is called Interactive Brokers. Another one's called Boom Securities. And they're brokerage firms that let Americans trade and Europeans and Canadians, let them trade directly in the Asian markets through their platform in US dollars. And you can trade the American markets as well, so you don't need to have a separate brokerage account. Interactive Brokers actually has been around for about 30 years, and their design, I mean, they're very well known. You've probably seen their commercials on CNBC. Their software is designed for active traders. Their commissions are very low, one of the cheapest in the business actually. But they also give you access to many of the Asian markets, Hong Kong, Australia, Japan, and so forth. And actually, we have a special partnership with them with their Hong Kong branch office. And as a result, they actually pay us a small marketing fee if we refer clients who use this referral code, which is 17760, and that savings we actually pass on to you as well. So if you sign up and you open an account with us and you become a member, then we can actually give that as a rebate to you in the form of, if you bought it, for example, a diamond membership. So, but that's basically what it is there. About, if you want more details, Dan, you can just email me and I'll give you more details about I can introduce you to a representative who can help you out and answer your questions. Here's my email address, by the way. Deron at DragonCharts.com or Deron at MorpheusTrading.com, either one. Melinda says, good work, Deron. Thank you, Melinda. Is there any way to save the customized scan parameters? At the present time, there is not, but that's actually a very good idea. And I'm going to make a note to our developers right now to see if we can incorporate some saving the parameters. That would definitely be a time saver. The beauty of a company like DragonCharts is we're small enough right now anyway that we can actually directly take feedback and suggestions of our users, and we have our own development team, so literally within a matter of days, we can have features incorporated. So that's a good suggestion there. I appreciate that. Gary, DragonCharts is based in Hong Kong, city of Hong Kong and the country of Hong Kong. Morpheus Trading, though, my other company that is based in the US. The beauty of the internet is you can be everywhere at the same time. Let's see, what's the other question? Dennis, is this course sent on DVD, online videos? Dennis, it's only on online videos. It's very easy to put it on DVD. You can, or I guess if you wanted us to, we could even put it on a DVD for you, but no one's requested that yet. Most people just like to watch it and rewatch it online, but we could put it on DVD if you like. It wouldn't be that difficult to do that. Yes, Dan, there is plans for that. In fact, we just, it's only within the past week that we added the US and Australia. Initially, it was just the Asian markets, and it's very easy for us to import other data. We built a model that we can actually add other markets. In fact, what our long-term plan here is to actually have a global stock screener where you can scan for even like South American markets, European markets. We start in Asia and now the US, and we plan to expand. It's easy to add data for Thailand. We also had a request to add data for Malaysia and Taiwan, so those will be coming soon. Yes, Eric, that's actually how it works. If you sign up for the 2-week trial, when you select the 2-week trial, you would click on Diamond membership, and then what would happen is you would actually get the 2-week trial for free, and then if you didn't cancel, we would just bill your card for $7.95 if you sign up today. It's normally $8.95, but if you sign up today, then it'll be $7.95 after your 2-week trial. Sure, Melinda. In fact, if you become a member of DragonCharts, we actually do stock pick videos on the Hong Kong market every day. And actually, I mean, the screener works exactly the same way, and the markets work the same way, because technical analysis basically works the same in every market. Tom, the other international broker is Boom Securities. Boom Securities. And they're based out of Hong Kong, but they give you access to a lot of the small markets. You can even trade like Thailand, for example. You can trade Malaysia, a lot of the smaller markets. Okay, great. Well, it's actually time for me to go to bed. I actually work I work a lot because I work U.S. hours with Morpheus, and I work Asian hours with DragonCharts. So I've been up since the U.S. market closed, and it's like 9 in the morning here. Time to go to bed. I'm nocturnal. Great. Well, thanks for joining us, everybody. Again, if you have any questions, just go ahead and send me an email right there, and I'll be happy to answer your questions. Thanks for coming, everybody, and we'll see you at the next webinar. Good night.